Good morning, guys. My name is Ali. On this channel, we talk about making money online. If this is something you're interested in, hit that subscribe button and continue on watching. Today's topic is very, very important. I want you to guys imagine if there's a system that can show you how to repair your credit and go from paying $900 for a car payment to instead of paying $900 for a car every month, paying $400 for the same car. What if there's a system that lowers your mortgage from $3,000 a month all the way down to $1,200 for the same house? This is what we're going to talk about today, specifically about credit repair. Most Americans are missing out on great deals and great offers because of their credit score. And today I'm going to show you how to overcome that obstacle and give you an option to repair your credit yourself or have someone else do it for you. I'm going to leave two links below that's going to give you both options. Either do it yourself using a software, proving software that will do all the work for you, and also going to give you another option where you can outsource the whole thing to a company and have them do all the work for you. It just depends. If you're a savvy person and you don't mind getting on a computer and clicking a few buttons, and then do it yourself will be the way to do it. And if you don't feel like doing that, you can outsource it to somebody else. Let's come over here and talk about, this is my student loans actually with Great Lakes, and I went on their website and they're talking about why credit is really important. Let's read this real quick. What is credit and why is it important? Credit is part of our financial power. It helps you get things you need now, like loan for a car or a credit card, based on the promise that you pay later. Working to improve your credit helps ensure you qualify for loans when you need them. What is credit? Types of credit. There are many types of credit. The two most common types are installment loans and revolving credit. Installment loans are set amount of money loaned to you to use for a specific purpose. Common examples of installment loans like student loans or auto loans. Revolving credit is a line of credit you can keep using after paying it off. You can make purchases with it as long as the balance stays under credit limit, which can change over time. Credit cards are the most common types of a revolving credit. So basically what they're saying over here, you got two types. You have the installment loan, which is something you could, it's what you use to get a student loan or an auto loan when you purchase a car. That's called an installment loan. Or you got revolving credits. There's two types of credits. Again, what they're saying here, there's installment loan and revolving credit. Revolving credit would be like using a credit card. Basically, as long as you keep the limits, you keep it under the certain limit, you can continue on using that credit. That's called revolving credit. Credit cards. I'm going to pause this here real quick and play. Have the speech to text read some of this to you guys.
Credit cards. Not all credit cards are the same. Make sure you explore all pros and cons of credit cards when choosing the right one for you. Interest rates. Interest is a cost of borrowing money. Lenders generally charge a certain percentage of the average daily balance of your account, which is called an interest rate. This interest rate is applied to your outstanding balance on a monthly basis. Credit cards may have different interest rates for different types of activities, like purchases or cash advances, so make sure you read the fine print.
That's what it boils down to, guys. By having an excellent credit, you can lower your interest rate. So instead of going into a dealership and purchasing a car at 10, 20% interest rate, by having a good credit, you can purchase the exact same car for, with lower interest rate, like say 3-4%, and that would actually change your monthly payment from say $1,200 down to maybe $400. It makes a huge, huge difference. And the same thing applies for purchasing a home. Your mortgage will be a lot lower by having excellent credit. Credit's really, really important if you're looking to build a successful future. Um, what else? What else? I know I had a couple ideas in my mind. Let's continue on reading right here. Oh, credit cards. Like for example, when you go to apply for a credit card, um, perhaps you might be denied because of your credit, or you might get approved even though you still have bad credit, but your interest rate. I've seen some credit card companies will charge up to 20% or more. That's just incredible. Can you imagine they're charging you $20 for every $100 you borrow? That's insane. On the same token, if you have good credit, you'll have credit cards that will charge you 0%. They're saying, here's our money, go ahead and use it, and we won't charge you anything at all. So you see the difference here? These guys are giving you $100 and saying you can go ahead and use it and we won't charge you any interest. But you have bad credit, they're going to charge you 20%, 18%, 22%. I've seen them as high as close to 30%, which is absolutely insane. Another thing too, I'm reading over here, credit limit. If you do have bad credit and you apply for a credit card, your credit limit may be $1,000 based on your low credit score. On the same token, if you do have great credit, your credit limit can go up to 10, 20, 30, 50,000, 100,000. The better your score is, I believe it starts from 300 up to 850. And the higher your credit score is, the higher your limit. Yeah, there it is. 800. There it is. 300 from your credit score can be as low as 300. It's called FICO score, by the way. As low as 300 and as high as 850. Let's read the FICO score real quick thing here.
What is a FICO score? Credit reports are used to generate a credit score. One of the most commonly used credit scoring formulas is Fair-Isaacs FICO score, which ranges from 300, low, to 850, high. The higher your score, the more likely you are to be approved for new credit or offered a lower interest rate. Many factors from your credit history are used to calculate your FICO score. The nationwide consumer credit agencies don't disclose how scores are calculated, so no one knows exactly how they are determined. The agencies may have different data on your credit history, so your score can vary between the agencies. Your superpower. Good credit. Many aspects of life are affected by credit ratings. They may determine whether a lender approves a new loan, influence your interest rates and fees on the loan, be reviewed by employers before they offer you a new job, be used by landlords when deciding whether to rent to you, determine your student loan eligibility, including most private loans, be reviewed by insurance companies when you apply for many types of insurance, including car or homeowners insurance.
These are very, very powerful statements over here. Determine whether a lender approves a new loan. When you go to apply for a loan and if you have bad credit score, you get denied. Or if you get approved, they're going to approve you at a very, very high credit. When you purchase a home, that's called a subprime loan. I believe that's what it's called. It means a very risky loan for the lenders, for the bank to actually to offer you that. Influence your interest rates and fees on the loan. Be reviewed by employers. Oh, that's an important one too. Sometimes when you go to apply for a position at a company, they actually check your credit score, which is pretty crazy, but it gives them an idea whether you are a responsible person or not, whether they can hire you for that position. If you are irresponsible with your money, you may be denied for that position at this company. That's why credit score and excuse me, and having good credit is very, very important. Again, I'm going to leave 2 links below, guys. The one option is going to be done for you. You can actually outsource the whole thing and have somebody else do it for you. And the other option is you purchase the software and you follow the steps. Everything is laid out for you in simple steps. What's really cool about the software too, it's going to allow you to repair your credit. And if you have any family or friends or anybody else that needs their credit fixed, you can use that software as many times as you want. Basically, you own it. It's one-time purchase, small payment, very, very small payment, under $100, guys. And you can own that software and you can use it for yourself or friends or family or anybody that needs help. Determine your student loan eligibility, including most private loans. Even when you go to apply for a student loan, if your credit score is low, they won't even give you the loan. And here's another important one too: be used by landlords when deciding whether to rent to you. When you go to apply, when you go to rent an apartment or whatever the situation, mortgage or rent, they also look at your credit score. And if you have a very low credit score, they will not rent to you. So that's a very important factor there. Be reviewed by insurance companies when you apply for many types of insurance, including car or homeowner insurance. That's very true. If you have high credit score, the insurance company will give you better rates just because your credit score is high. I mean, so you guys can see right now how much your credit score really affects your day-to-day lifestyle. Having credit high or excellent credit score is really, really important. I believe if we go down here to the chart again and look, you see how it says 300 to 850. I believe if you're in a 700, that's considered very good, and if you're in upper 600, that's considered good. So you want to be between 6 and 7, but the most ideal place to be is in the 800. That's considered to be very good, and that's when you start getting 0% interest rates, and you're going to get the best deals on everything you apply for. Super credit tip. Let's see what these are.
Super credit tips: always pay bills on time. Keep low balances on credit cards. Monitor your credit report to ensure there aren't any mistakes. Visit annualcreditreport.com for a free report from each of the 3 major nationwide consumer reporting agencies once every 12 months. Avoid too many credit inquiries in a short period. Protect your finances. Keep financial records in order and always watch for fraud and scams.
All right, guys, I'm going to stop right here. I hope this video really helped you. I want to emphasize how important having a good credit is. It really makes your life a lot easier. Imagine purchasing a car for I don't know, $5,000, and instead of paying the $5,000 just because you have low credit score. You're gonna end up paying $15,000 to $20,000. So you guys can see, I mean, that's additional $15,000 that you would have to pay just because you have low credit score. So by maintaining good credit, one thing actually I want to mention before I let you guys go is a lot of the stuff that you have on your credit report may be very old, and it can be taken off of your credit very easily. It's just a matter of writing these letters to your creditors and letting them know that this stuff, I believe anything over 7 years cannot stay on your credit report, so that stuff can be taken off. Or if you do have stuff that you do owe that it's small amounts, say under 1,000, couple $100, whatever, you can go ahead and pay these loans off and get them off of your credit report, and that will make you eligible to have a higher credit score, in return having better deals on your future purchases, whether it's a home, auto, or whatever the situation may be. I wish you guys the best luck. Again, I'm going to have two links below. One is going to be done for you. You can outsource the whole thing and have a company do it for you. It's going to cost you a little more. It's not that much more. I've used it myself and it works really, really well. And other option you have is do it yourself. You can purchase the software and just basically follow the steps that are available on the software, and in no time you're going to have excellent credit. Oh, here we go. The three credit reports that I was trying to talk about. The reporting agencies are Equifax, TransUnion, and Experian. So basically you want to have a good standing records with these three reporting agency. Consumer reporting agencies are Equifax, TransUnion, and Experian. All right, guys, have a wonderful day. If you're new to my channel, please don't forget to like, subscribe, and comment. And if you have any questions, please leave them below, and I'll be more than happy. I actually went through this process here. I had stuff from when I used to go to college years ago, and I hired this company, and I'm too busy, so I didn't want to do it myself option. I want to just outsource it, and I paid a little extra money, and it was well worth it. And the company that I have down here, by the way, it's a company that I used, so I highly recommend it because I've seen results right away, and my credit score is up to 750 right now, which is considered to be very good. I just had stuff from college days that they were able to take off, and so far I'm very happy with their work. I always like to recommend companies that I've actually used myself. Anyway, going back to what I was saying, if you guys have any questions at all, leave them below. Leave them in the comments below. If you are part of my channel, I want to thank you so much. I appreciate your support, and let's get those credit scores up, and let's live a better life and stop wasting. We work very hard for our money, so why just give it away? All right, have a wonderful day, guys, and wish you the best luck. Don't forget to click the link below and get started on your credit repair. Have a wonderful day. Bye-bye.